Hey, gang, it's me, Dr. Steve, and I've invited my good friend Michael Lush to the program. Many of you know him as the man who's exposing the secrets of the big banks and helping thousands of people, including many of you Turley talkers, pay off their mortgages in as little as 5 to 7 years. Michael's an expert on the economy, and I'll tell you more about how you can get plugged into what he's building later on in the program. But right now, I would just want to bring him in to discuss the blind spot that many conservatives have right now when they're trying to build their own parallel economy, their parallel polis, as we like to call it, to separate themselves from woke liberal corporations. So, Michael, welcome back. Good to see you again, my friend.
Thanks. Always good to talk with you, Steve.
Yeah, it's awesome. All right. So Biden claims, that it's his priority to lower inflation rates and tackle sky-high mortgage payments for many Americans. But, I mean, his policies obviously say otherwise. I mean, he's in Kiev right now, for heaven's sakes. Where do you see inflation rates going in this upcoming quarter?
Yeah, in the quarter, that's an easy one to answer. It's definitely going up. You look at the Inflation Reduction Act. It's as much of a climate bill as it is, if not more, than an economics bill. And, one thing it's targeting is to increase taxes on the wealthy. And one thing that we know is that the wealthy pay 90%, the top 10% pay 90% of the revenue that goes into the Treasury. And they have a very creative and such a knack, the wealthy do, with, I wouldn't say avoiding taxes, but paying more than their fair share. Again, they're already paying 90%, right? And I don't claim to be one of them. So I'm kind of talking as an outsider here. I don't want them to be taxed to oblivion, because what does that do to the overall economy? And when you look at the Inflation Reduction Act, it's actually going to exacerbate inflation because it's taxing them more. And, I just look at myself as a small business owner. If I were to be taxed more, what am I going to do to offset the taxes that I would incur? Increase the prices to my consumers. Right. No, every other business is exactly the same. So when you think it's going to reduce inflation, it's actually going to cause inflation to rise because of the bigger corporations like Amazon, Nike, and so forth. You're either going to tax them out of the country, or you're going to force them to increase their prices to the consumers. So it doesn't actually solve the problem. And not to mention, part of that Inflation Reduction Act set aside $80 billion to the IRS for them to come up with a spending plan. And you probably already know, because you read these headlines, they've missed the deadline. They haven't even come up with a plan to spend the $80 billion. So
I didn't see that.
Part of the Inflation Reduction Act was to reduce inflation by spending more money.
Right. It's absurd. It's insane.
Yes.
Well, not only is inflation something that needs tackling, but there was a recent article highlighting how January was the worst month for job cuts since the Great Recession. And they're already saying more layoffs are coming throughout this month into March. So what should patriots be doing to protect themselves from all of these impending layoffs?
You alluded to it earlier in this conversation, which is to create your own parallel economy, right? So you need to shelter yourself from these, what I call external factors, things that are outside of your control. For the most part, you cannot control inflation, right? These are things that are going to happen to you or happen for you, right? So you don't have to be a victim of this. You can actually be a victor. It depends on how you look at the way the economy is going. In every recession, and again, we've talked about this before, we're heading into a recession. If not, I think we're already in one. Those have abundant amount of opportunities. So really, you have to change your perception of the way you look at the economy and the marketplace. And you also have to protect yourself, but not only protect yourself, that's playing defense, but there's a wonderful way of playing offense with this too. So you do have to have capital. And that's one thing that we do at Replace University is we show people how to find the buried treasure inside of your home or inside of your own local economy. Where do you find that capital, and how can you utilize that capital for your advantage or your family's advantage or even your neighbor's advantage, your local conservatives? So that's what we do is we show people to find the capital. Then what we do with the capital is not only play defense so we can shelter ourselves from inflation or external factors, but also start playing offense.
Right. And that's where that investment comes in. I know this is certainly where the magic that you work with mortgages comes in. Many see their mortgage rate as their biggest monthly expense. what do you see as the blind spot that most people have about the way they approach their mortgage?
They look at a low rate as low interest, and that is not necessarily the case. When it comes to financing real estate, two things you have to focus on that are far more important than interest rate is time and balance. Time and balance dictate rate of interest. Interest rate dictates what your payment is. So if you can attack time far more aggressively and balance far more aggressively, you reduce the amount of interest that you're paying. Now, a lot of folks are sitting in a situation where they got a loan, last year or 2 years ago or 3 years ago, and it was really low interest rates. And now they're looking at, they have all of this equity built up in their home because home prices have skyrocketed. So they've got tons of equity that just fell out of the sky. So they want to access it, whether it's to pay off other consumer debts or it's to invest or leverage, but they don't want to give up that low rate. So what we've done at Replace Your University is we've come up with 4 different strategies to keep borrowed funds well below 5%, if not keeping your existing mortgage rate. Now, the ultimate goal is to replace the entire mortgage altogether, because as we talked about many times on this show, is that a mortgage is a death pledge. It's a death contract. And you're really paying, when you look at the last page of your loan estimate and you see a term, it's called total interest percentage. That's really telling you how much interest you're paying. And what that document is telling you, and that's a government forced disclosure for these lenders, is telling you that the bank is getting one house and you're getting the other house. So you're paying for 2 homes, but you only get to live in one. Now, can you guess which home you're paying off first? The bank's home, right? And so they get their home first, then you start paying on yours second. So we show you how to really flip that on its head and start paying your home off first. And now, if you're borrowing money from the bank, it has to be a win-win situation, right? It has to be consumer friendly, it has to be bank friendly, or else they're not going to offer these products. But we open the door to show consumers where to find these products and how to leverage them for their own financial success, as opposed to just propping up the banks.
So so for those who are really looking to accumulate wealth and grow their wealth, is it possible to secure and grow personal finances in any economy, or do we have to wait until bumbling Biden's out and the like?
Not just in any economy, but more so in this economy. So it's counterintuitive. You would think that a down economy, market is very volatile right now, that this is the hardest time to make money. It's actually the best time to make money. It's also the cheapest way to get borrowed funds. Now, again, that's counterintuitive, because what do we see in the headlines? The Fed is raising interest rates, right? So you think that rates on borrowed funds is actually higher. See, banks have to have customers continue coming in the door for 2 purposes. One, they still need new originations. But the second is they need to protect their balance sheet, because a lot of folks 2 and 3 years ago got home equity lines of credit, but didn't use it the way that we teach. So they're up against the ceiling of the limit of their home equity line of credit. So these banks are flooding the market with what we call promo rates, or introductory offer rates, anywhere from 0% to 3.99%, right? So banks are flooding the market with this because they need to protect their own balance sheet, because of those folks that weren't doing what we teach are bumping up against the ceiling of their limit. And when you go from 3% to 9%, those interest-only payments get really high. And the banks are running a risk of going in default. So they offer these promo rates to their consumers to lower the rate and lower the payment. So we are actually utilizing what the banks already offer for our own benefits. So this is actually one of the best times to do what we teach. And yes, you can not only lower debt and pay off debt, but also invest at the same time. It's what we call mirroring, where you can have money, the same dollar, in 2 places at the same time, not only reducing the interest that you pay, but also accumulating interest for generational wealth.
I mean, whenever I talk to you, it's always so fascinating. You're always finding some new angle to it. But I you're a numbers guy. I mean, you've got all this this whole like jujitsu of finance, and I'm just like, whoa! It's hard to keep up. You created an entire program to basically walk people through this process, particularly with regard to how to actually get out of the mortgage death oath debt. Can you give a bit of an example of how this is has changed the life of a Patriot family, just like people who are watching right now?
Really good timing. So on the heels of this interview, I just got off 5 minutes ago with one of your followers. His name is Kevin. And we were on an hour-long Zoom training where he's been a client of ours since 2017. Now,
Nice.
his mom is a CPA, and she deals very heavily in tax liens, right? So not something that you could say is guaranteed, but it is one of the lowest risks that you could take with your money. So we've come up with a strategy and this is somebody who's been successful with Replace Your Mortgage. Now he's dove into Replace Your Banker, and he's also diving into Replace Your Dollar and learning some day trading. But where is he getting these funds? He's getting funds from his home, right? The equity in his home. He's now leveraging that. So some people on the outside looking in look at us as we're a debt-free solution strategy. If that's the way you want to look at us, that's fine. I haven't found a better way to become debt-free. But depending on where you're at in your life cycle, it doesn't always make sense to be debt-free. Why not leverage really cheap cost of funds to grow generational wealth? So having the Zoom call with Kevin and his mom, who's a CPA, and we've actually come up with some really cool strategies where we found the capital, right, to put into these really low-risk investments that are yielding anywhere from 22% a year to 46% a year. Wow. You can't use the word guaranteed, but it is a fixed interest rate return that these investments are. So he's leveraging. It's really cool because this is something I haven't come up with. So I get credit for a lot of things. I'm not going to take credit for this. This was one of your listeners that became a client of ours in 2017, and they got hooked on to you, I want to say 2 years ago, and he came back to us and said, "Hey, I've started utilizing this 6 or 8 months ago. And this is really cool." So it's something new that we're actually going to roll out tomorrow for our VIP members and start educating them on, so they can take, let's say you're borrowing money at 3.99%, but then you can grow that to 46% a year. Not only are you making up for the cost of inflation, this is where we get back to the original point. What about inflation? Control what you can control, right? If inflation is going to be 8%, it's going to be 8%. If it's going to be 6%, it's going to be 6%. There's very little you can do as a conservative to protect yourself from it, or I'm sorry, I don't want to say control inflation, but offset it is what you can do. So if inflation is 6 to 7, 8%, but you're earning 46%, you've negated inflation altogether, and you set up your retirement plan for later down the road. So this is what we have to think outside of the box. We also have to take accountability. That's one of the things that I struggle with the leader that we have in office now. And I struggle to even call him a leader because he's not taking ownership of the circumstance we are. I mean, one of the things that, this is easily fact checked, that he inherited inflation. No, inflation under Trump in 2020 was 1.2%. In the next year, in 2021, it rose to 4.7 and it peaked at 9%. That was an inherited problem. So we have to take ownership, right? So not only at the highest level, but also at our level, we have to take ownership of our own economy and start thinking differently and really get back to basics. And that's what we teach, is getting back to basics to not only play defense with your money, but how to play defense and offense at the same time.
And there's that mirroring you were talking about. Yep. So you're hosting a free event coming up. I'm sure there's plenty of Turley talkers out there who want to break free from this ridiculous burden of dealing with bumbling Biden. When is this event, and how do people sign up?
It is not free. It is $97. $97 goes to charity. Actually, it's Heart of Champion Sports. It's a charity that we love to lock arms with. They help young athletes not only understand the gospel, but also, get some type of ethics and morals, because these colleges are now looking at these athletes and they have a DISC profile. So they're not just looking at what they do on the court or on the field. They're looking at how they interact with their teammates, how they interact with their coaches, and they come up with this profile. So they're actually being recruited based on their morals and values.
That's
so Heart of
awesome.
Champions is kind of spearheading, making sure that these are not just good athletes, but they're good young men and women that these colleges are recruiting. So $97 is what it costs to attend this event, and 100% of that is going to Heart of Champion Sports. And it'll be at 5 p.m. Central Standard Time, and it'll be each night. It'll be 5 days. So, and it's for 1 hour. So from 5 p.m. Central Standard Time to 6 p.m. Central Standard Time. And then I will stay on for another hour thereafter to answer any questions that they may have.
Wow. Awesome. Oh, this is amazing. That's good. That's going to be, gang, this is an opportunity you don't want to miss. If you don't know, I mean, those of you who've been on this channel for years know Michael's been a regular. Michael's actually a very close friend of our channel. He's worked with members of our Turley Talks team, giving them all kinds of insights into how to deal with their mortgage. We have a lot of young people on our team who are just first-time home buyers. I know one in particular who's working with you right now, Michael. Guys, you got to click on the link below and sign up for this 5-day training challenge. This is awesome. And plus, like Michael just said, that the fee that you'll be paying actually goes to this amazing charity, Christian charity. So Michael has changed literally thousands of lives with his amazing program. He's helped save several people in the Turley Talks team from giving millions of dollars of their mortgage to the federal government. I would not share this with you if I didn't believe in Michael 100% and what he has to share. I encourage everyone watching right now, take ownership of your own personal economy. Click on that link below. Sign up for this event. All you have to do is we have a special website, turleyeconomy.com. You can just click on that link below, but turleyeconomy.com. This is guaranteed to change your life. That's what Michael does. That's what he specializes in, changing lives. Michael, my friend, thank you for coming back. We'll have you back real soon, my friend.
Thanks for always having me, Steve.
You bet.